So, when I say the name Ola, what's the first thing you think of? Is it the app on your phone that you use to grab a ride? Or is it that electric scooter you see zipping all over the city? That little bit of confusion right there is the heart of one of the most wild and high-stakes business stories happening right now. We're going to untangle this whole thing and figure out what Ola is really all about. So here's how we're going to break it down. First, we'll look at the original Ola, the company that changed everything. Then we'll get into that massive, shocking pivot into making hardware. After that, we'll dig into the insane growth and, well, the equally insane headaches that came with it. We'll see how Wall Street reacted to this huge gamble. And then finally, we'll ask the big question: what's next? All right, let's kick things off with the original disruptor. See, to really get what Ola's doing now, you have to go back to the beginning, back to the company that solved a problem every single person in India knew all too well: the daily fight with auto rickshaw drivers. It's kind of easy to forget now, right? But Ola started with such a simple, elegant idea: an app on your phone that gets you a ride. It wasn't just a little more convenient, it was a total game changer. For millions of people, it made getting around town so much easier and brought a whole new level of order to the chaos of city travel. And this timeline here, it's not just a bunch of dates, it's a story of pure ambition. They start in 2010, and in just 5 years, they buy out their biggest competitor and basically own the market. Then they jump into food delivery, and by 2021, they do what so many startups only dream of. They actually made an operating profit. The rebrand to Ola Consumer looked like the final step. I mean, this is the textbook definition of a tech success story. And the numbers are just huge. We're talking 150 million users, a network of 1.5 million drivers. They're in over 250 cities. They got in early, built this massive ride-hailing empire, and it was working. It was a profitable, stable software company. So you'd think the plan would be simple, right? Just keep doing more of that. But no. Instead, they decided to risk everything on something completely different. And that, my friends, brings us to the big plot twist: a shock to the system. This is where everything changes. Ola, the company that existed on your phone screen, decided that just connecting you to a ride wasn't enough. No, they were going to build the actual vehicle themselves. And look, we got to be super clear here. This wasn't just like launching a new feature. In 2019, they spun off Ola Electric into a totally separate company. This was a massive shift, from the clean, digital world of code and data to the messy, expensive world of factories, supply chains, and metal. It's a completely different game, and it costs a whole lot more to play. And this slide, man, it just nails the difference. On one side, you have Ola Consumer. That's the software company, right? It's asset light, which is just a fancy way of saying they don't own a ton of expensive physical stuff. On the other side, you have Ola Electric. This is a beast of a manufacturing company, building scooters, bikes, their own batteries in a gigafactory, the whole shebang. It's capital intensive, meaning it needs gigantic amounts of cash to work. Two completely different worlds under one brand. Okay, so this is where the story gets really juicy. This is the central conflict: the mind-blowing growth of Ola Electric versus the absolute nightmare of growing pains it caused. Because that explosive rise, it came at a truly jaw-dropping cost. I mean, just look at this chart. The speed was unreal. In just 3 years, Ola Electric went from having less than 6% of the electric scooter market to almost 35%. They didn't just show up to the party, they kicked the door in and took over the whole house, becoming the #1 player almost overnight. But, and this is a huge but, that dominance cost a fortune. In fiscal 24, for every 2 rupees they brought in, they lost more than 1. Think about that. That's just burning cash. And then it gets even weirder. The next year, their revenue just fell off a cliff, dropping by a shocking 80%. A big part of that was the government cutting back subsidies, which made all EVs more expensive and just cooled down the whole market. It just goes to show you how incredibly risky this hardware business is. And all that financial pressure, you bet it started showing up in the real world. You know that Silicon Valley mantra, move fast and break things? Yeah, well, things definitely started breaking. We're talking over 10,000 customer complaints that just went ignored, a big safety recall for a bad part, and just tons of stories about terrible customer service. And it didn't help that the CEO was often getting into public arguments. And it's not just stats and numbers, it's about real people. This one comment from a user on Reddit, it just says it all, doesn't it? It's what happens when a company grows so fast that it can't keep up with its own promises to the people who bought their product. So, let's recap. You've got this insane market dominance, you're losing a staggering amount of money, and a lot of your customers are pretty angry. So how in the world does the stock market put a price on something like that? Well, this is where we get to the billion-dollar IPO. Well, before they even went public, and despite all those red flags we just talked about, the vision was so powerful that private investors valued the company at a whopping $5.4 billion. That was a bet on what the company could be, not what it was. Then came the big day. They offered that bet to the public. When the IPO finally happened in August 2024, the starting line was drawn at 76 rupees per share. That was the price of admission to buy into this high-voltage dream. But since then, well, reality has kind of kicked in. The stock has had a rough time. And maybe more importantly, the analysts who cover the company have an average price target of just over 48 rupees. What that really tells you is that the market is super skeptical about one simple question. Can Ola Electric ever actually make a profit? All right, so that brings us to the final big question. What's next? For a company with this much forward momentum, but also this many problems, how do you convince everyone that you've got it under control? Their answer, it seems, is to just double down. Hard. Their plan for the future is, well, it's breathtaking. 20 new products in just 2 years. Expanding to 2,000 stores, firing up their own gigafactory to make their own batteries, and launching a whole new line of electric motorcycles. They aren't tapping the brakes, they are flooring the accelerator. And so, here's where we leave it. The original Ola, the app, it completely revolutionized daily life for millions of people. No question about it. But this new high-voltage Ola Electric, it's a whole different animal. So the ultimate question is, can this tale of two Olas, two completely different companies, actually find a single successful ending? Or is this massive, incredible high-voltage gamble going to cause the whole empire to just short circuit?